Following an exciting week in 2024, investors considered a minor sell-off in Bitcoin and problematic, resulting in a price dip to 41,700 with a slight recovery to 42,400 at the time of reporting. The focus now shifts to whether cryptocurrencies will experience their resurgence. Or will it crash massively in the next couple of days? Let's discuss it in today's video. Don't forget to subscribe, like and share, and let's start. So let's discuss the potential Bitcoin's rise amidst the market speculation that we are having so far. Volatility in the spot price of Bitcoin has been noted due to the outcomes of demand sales in the future markets, which is expected to continue. The long-short ratio at Binance Futures has reached its highest level in recent months, indicating investors believe that a local bottom has been established and anticipating a rise. According to the block's data dashboard, the ratio of long to short positions has surged to 286 following the approval of multiple Bitcoin exchange-traded funds, suggesting a strong bullish sentiment as a balanced market would reflect a ratio of 1. Metrics reaching recent highs and promising with the CoinGlass data confirming dominant long positions, signaling an uptrend. Current CoinGlass position data shows 42% of investors are bullish, while only 22% hold bearish positions with the rest neutral. However, there is a risk of price movement and in the opposite direction due to the crowd behavior. Price dips have been observed when liquidation data shows accumulation in ranges appealing to market makers and the large investors, so indicating speculative hunting. Strong spot demand is necessary to counter this. Upcoming US stock market activity and potential ETF-related news may provide a needed spot support, while the macroeconomic front remains cautious with upcoming Federal Reserve meetings. Next up we go as breaking, as the hash rate of Bitcoin has reached an all-time high of 532 EHs, and this is a significant achievement and indicates a strong growth in the Bitcoin network, and this is basically how the chart looks like so far. Next up we go, me with a half of Bitcoin at a Porsche dealership, and basically that will be everybody when we are going to reach that point where the Bitcoin is going to be $500,000 and we are about to buy our own Porsches. Next up is the Bitcoin 200-week moving average has only gone up historically, and now it's officially above 30k. Basically, that's what we could see. If we'll just scroll further, we could see that on every single chart, the full history, 200-day window, 200-week window, we are only in a growth, and we were never that much low, as we are only growing, and you need to understand that. It's just the start, and we are still continuing to grow every single day, every single week. I'm very sympathetic to the cash and skin crowd because their heart is in the right place. However, they need to understand the future is digital, and your choice will either be CBDC, slave money, or Bitcoin freedom money. Also, Bitcoin is the next move right here. So basically this guy predicts it to go up to 45k, and basically then after go to as low as 41,000 and maybe even lower than that, entering a new low position. Let's see if his prediction is actually playing out like that. It's never taken me more than 60 minutes to pick interest and willingness to allocate 1% into Bitcoin with the people with a 500k net worth since I got Orange built in 2020. Now with an ETF, I bet I could do it in just 30 minutes. And next up we go as hype accelerated the past months as everyone became hyped for the next Bitcoin ETFs. 1 week later I can feel the hype being cooled down. That's a good and healthy thing. Let price and hype cool down for some time before we take the next leg up. Still massive buy opportunities in the market, act accordingly. Also, Wall Street doesn't control Bitcoin as Bitcoin controls Wall Street. Vanguard is a massive financial institution that doesn't allow investors to get exposure to Bitcoin ETFs. I think this will change within a couple of years because of pressure from clients. Bitcoin's characteristics make it a much better investment than index funds, meaning money will move to institutions that do offer a Bitcoin ETFs. The typical bull market phases are reflected in this chart. So far, Bitcoin is following this textbook pattern, and a correction like in the upper image would make sense. The immediate ETF effects may play a role here, leading to an earlier breakout. We will see. This is our bull market neckline, also a retest that we might be getting through. So basically what I expected to be, it was in S&P 500 2001, 2005, and now we are looking into the Bitcoin 2021 to 2024, same chart basically. Also, despite the ETF approval narrative, Bitcoin seems to follow the previous cycle's price action. A steep correction witnessed in a previous cycle due to the COVID is unlikely to play out in this cycle, assuming the Black Swan didn't occur. The halving cycle seems more potent than any other narrative. This is all the information I wanted to talk about on the Bitcoin today. See you in the next one, and peace.